morning, everybody, and welcome to the Breakfast Club. My name is Darren Hancock, and here we are on happy Halloween. Hope you all having an excellent day, and I hope it's filled with lots of ghouls and goblins and crazy kids running around collecting candy. I remember back in the day. Boy, I remember coming over from England, and because we didn't really have Halloween when I was a kid in England, we didn't go around collecting candy and stuff. And I remember coming to Canada, and they gave me this little plastic pumpkin, and they said you get to go around to different houses and collect candy. And I thought that's crazy. And then I went around. The people were throwing candy in this little plastic pumpkin, and I thought I'd landed in, I don't know, heaven. As a kid, 8 years old, you're like, I can't believe they're giving out candy. And the little pumpkin, I kept filling it up so fast. I was like, I dropped the pumpkin. Give me the pillowcase like the other kids. And I was running and running, and they're like, "Okay, you got to stop now." I'm like, "No, no, no, no! If they keep handing out candy, I'm bringing up bags of this stuff. This is awesome. I love this country." Yeah, it was a shocker to an 8-year-old kid. It's like they give you this for free. Do they do this all the time? Yeah, every year. No way. Man, it was a haul. What a great way. We came over from England back in July, so October comes around and there's this special day out of the year where you get to collect candy. How awesome is that? Yeah, never went back to a plastic pumpkin after that. It was like, give me something I can haul some serious thing and a little trailer if I can bring that because if it's too heavy, I got to be able to get back home, dump the stuff, and get out there again. Anyway, let's get into the market here. It's going to be, we're into non-farm payroll Thursday, Friday. So it's highly suggested that you stay out of the markets and just watch and observe. I'm not even taking any trades today. I did some early trade this morning before 8:30's little jumping around here, and that's it. I'm not looking at playing in anything else. I might, if we can get above this old, uh, maybe if we can get above 24.62 on a close, I'd like to see a run back into the larger range here over the last day or so, and potentially run for yesterday's high. But other than that, that may be wishful thinking. But I'd like to see that at least come back into this range 50% or so. And let's have a look at, I don't even have I don't even have my internet. I've got my iPad over here trying to, I'm going to be watching you guys for any questions, or I think it'll be a day where I'll play around in some stocks and have a look at some suggestions you guys have on some stocks you want me to look at and see if we can find something fun in here for you guys. Sorry, I'm just trying to get hooked up to my ThetaWave channel here. There we are. We are live, as they would say. Hans, Hadi, and Craig, good morning. Happy Halloween, gentlemen. Hadi's in the house tonight. He's been doing some awesome trading the last few days. Been killing it in demo dollars. That's what we're gonna say. Even if he's killing it live, the man is he's got this model down and he's doing really well. So congratulations, Hadi. Now let's try. Let's have a little peek over here. ES. No, I still don't like ES on a daily basis. If we can get below this low and use this wick, 50% of that wick as support to go lower and start digging into this candle's low, or sorry, it's my mean threshold, and then we'll see from there. So downside 7777 airplane mode. So yeah, if we can get in there, I'm looking at this small range. You're already at 50% of the range, so we'd have to dig right back up into the upper portion of that wick and start getting back down here. But we have to close below it first, and you're already into the candle, so I haven't got anything super exciting for ES. Now remember we're talking about Dow. I had this feeling Dow was going to do this big dive down. We gap down this morning or today, and then we're on a run down here already. We did have an optimum trade entry reversal. Sorry, an institutional order flow entry drill right here. Back on the 25th. Gap down, started back up again, and we've just filled this fair value gap. Now, I like the fact that we've popped out of it. Now, if we can get below that candle right there, then I look at this candle as support to really get some legs in here and start running for these lows and the liquidity further down, pull the range high to low here, and then look at 50% plus if you're going to use the FIB tool. But I'd like to see this really drop like a stone now. I'm sure some people in the Dow Jones would not like to see that, but hey, we're trading both sides of it, right? E-mini S&P. If we can get a body below 812, take out that low, and close below 812, I'd like to see that run back down into that. Yeah, 812. Dixie. I realized this morning, I was like, there's no way. The charts are moving over here and this is not moving. It was way back in June. So now we're in alignment. Nothing there on the daily other than a potentially return to 103.595. It's already come back into here, so I'd like to see that continue dropping now. Get below these lows. That's a 4-hour chart, 1-hour chart. We already have the reversal here. Trade below it, back up inside it. Beautiful. Peel off of there. If you're worried about, you want to see the break in market structure along with the swing, you wait for this low to get taken. It gets taken down here. Swings back up inside that level. Right back up into this imbalance again, one more time before going lower. And this is interesting because you have a small imbalance here for a long, and that order block is taken. And then you have this imbalance here for a short. So here's one of those ones where you go, am I in the wrong place? So if it trades through you and you're on the wrong side of this, like it shows you right here, and it can trade back into that for a short. You see how it hit here and then continued going short. So if it actually broke this candle's high right here, then you'd be it's a rinse and repeat. You want to see if this gets above this level and then continues to push back in through the higher objective, which would be up in here. But it didn't, and it carried on down. Take out the low, back into it, keep going lower. So we should start seeing higher prices on pound and euro. This isn't a consolidation, so you need to get above here. We need to be above 129.84 to start considering anything in pound. Euro. We have lows taken. An imbalance right here. Traded above it. Came back all the way back inside it. A little bit of wick. If you want to wait for market structure break, it's right here. If you can get back into this market structure again on the high, and you get it right there, and up you go. Continuation to the upside. I like it. So that'll be the stronger one of the two pairs when you compare that to the pound. It's sitting flat. And euro, it's on a tear. So I do like the euro dollar. Continuation on the upside. Oil. What do we got for oil? Well, this is a regular trading hour still, so we gotta go back in here now and mess with this. 4 hours is too far. Is there a hide gap warning? I got nothing in oil right now. Feels heavier to me instead of we're through here. If we can take out this low here on a close, see how the bodies are just refusing to go past there right now. We got a big wick through here, so I like the multiple pokes through. So I'd like to see if we can get a body through this candle and find some support at that. We've worked all inside this already. So if we roll over into this range, look for the 50%, 62, all the way back into that range there. Nat gas is always looking for new lows. MF, hello, how are you? Good morning, good morning. Yeah, I'll have a look at natural gas in a second here. I've got, other than this right here, it's super choppy right now, so again, I wouldn't touch anything today. If there's a clean setup and you take your chance, I'm just going to kind of be observing it today. I'm not giving back anything I've made this week. It's been a good week, so I'm sitting on the sidelines and I'm not prepared to give that back. So a lot of chop in Q right now. So even on this, when you think about, we've taken this high here, we have a reversal right here. You don't get an opportunity to get in on it here. So you look for this low to get taken. It takes it, and you don't get a chance to get in on it. So you look for this one here. It takes it. You don't get a chance to get in on it. You're all the way back down into this range here. It goes through it, works all its way all the way down into this candle's high. We get another little bit of a reversal. You don't get a chance to get it on it. And then you're right back up inside this range again. There is that candle there, and that's all you get that's even remotely off of this setup we're looking for inside that range, and it doesn't give you a heck of a lot. Finally makes its way back to this uh, break-in structure here, hits that, and now we get a bit of a reaction down. So you're looking at this little box down in here, probably anywhere from 380 to 384. And we'll see how that hits inside there. Good morning, Derek. How are you doing, my friend? There's 384, 383. So that's inside the box now. We've taken out this low. We have an imbalance. We haven't traded through it. I look all the way down to 6 or 380. So watch over here, look for 380. See if we close below 380. And let's get on with the wheat. The wheat, we're still looking for downside in wheat. Got my box down here for wheat. It's going to take us a week or so to get there, I think. Soybeans, we hit the upside objective here. Downside objective is there. We're in between these two right now. We're in 50% of the range between the premium and discount reversals. Corn, I put a little sign in here saying watch here the other day, and so we're looking for that downside here. Coffee, looking for sell side liquidity still. A little sugar, we had a little sugar rush, shot out of that range. I like that. We managed to take out the buy side liquidity yesterday, which is what we were aiming for, and now I'd like to see a return back into. Oh, we're literally hit it right now. So if that's a clean breakaway now, and we leave this open as a breakaway gap, I'd like to see that just continue going higher now in sugar. Live cattle. So for some reason we had some cowboys out there corral them all back up again, back into the range, back inside that consolidation, and back inside the fair value gap. So no breakaway yet. Cocoa. I've got nothing in cocoa right now. Oops. Let's have a look at cocoa. Okay, we've got a swing with this low is taken out here. So internal range run, we're already greater than 50% of it. This would have been the ideal entry right here for less than, for a discount perspective. Here's your first imbalance, second imbalance. This candle took out the first one and the second one. So you reach for the second one, comes back into the second. It's in a discount rate. When you get to 50% of that range, you can start to peel yourself out of there, or you can wait and hope that you get through this breaker here. I remember breakers are pretty strong candles. They're senior array, as I like to call them. They graduate from a simple order block to a senior array, which is like a breaker. That's senior. So in other words, that one you find a lot of resistance off of that. So inside that range, you start paying yourself here if you're not doing it on the 50, 62% fib tool pool. So I do feel that I might go a little higher into this range here, and we'll see if we get, well, it's actually right at the box right now. 27566 in cocoa. So if you haven't already taken your money in cocoa and gotten into it, then and wait, that's cocoa. Let's go back to little piggies. Look at how the little piggies have done a little run. So we got a break above here, so a little fair value gap below us here. We broke above it. We came back inside the order block, continued going higher. We wanted to see how far into this gap we have in price here. So if you take your, we got 9 o'clock. So if you take your gap range here from the close to the open, take your fib tool, and you can divide that range up. You see how we found support inside that first quarter. We wanted to see it break through here, so you got through the consequent encroachment. We actually gapped through it, so we're looking to see if there was any sensitivity off of that, and then return back into this order blocks open. Didn't get that. It just gapped up and just kept running, which is excellent. Ran through the 75%, and now we've taken out this short-term high here. So what I'd like to see is this little high get taken, a body come back into this high or the top of the gap here, and then continue working higher. So now you use the gap like any other fair value gap that we had before. You want to see a level of support. We could have a run back into 50% of that. The more we stay in the upper portion or just return to the high of it, the more bullish it is. So I'd like to see that one of two scenarios today. If we freeze today and then above that gap, Friday come back, tap it, and then continue pushing higher. If it doesn't, if it starts digging into that, then you're looking at 75 and 50% of that range as looking for key levels there. I would not want to see it get below, I would not like to see 81,250. I want to see that little gap there stay open and then keep pushing higher. So we got anywhere all the way back into here. I know it's quite a ways, but see if we, first thing is look for the support, then look for the return inside this gap, and then that order block as support. And if you lose that order block, then you're looking at a bigger run back into that range, inside that gap again. In the little piggies, if you're into the commodities. All right, let's have a look at Bitcoin. Five-minute hourly. We'd have to lose this low here for it to go lower. Otherwise, It's got to get above this high here now. So we're in this consolidation on the hourly. So it's sitting probably flat now for non-farm payroll and probably into the election. You're going to see a lot of markets just start moving into this range of seek and destroy. Just take out small little runs in liquidity, and then where we're going to wait for the election. What do I know though? I want to see this get above here if I want to go higher. It's got to get above 72, 200 big figure. Gold. I want to see this clear out this candle's low on a close for the hourly. I do like the 15-minute candle for a run back in here. We've got a body below here already. We're just getting a body below that now. So if you get a little pop back up into this candle, yeah, a little pop back up into this candle's low, either one of these two candles lows, and then continue on the downside. So you look for gold to start digging deeper into this daily BISI. Look for consequent encroachment and this old high here. It's 7721. Banks. Still looking for the ranging bank to drop down into my little box. Google. Remember yesterday I called for Google and the box? It literally gapped up, hit the box, and then shot back down again. So you talk about, does this algorithm even run for a big fancy company like Google? Look at that. Literally hit the box I gave you yesterday. You're welcome. Gotta love it when it comes together, eh? It's like you're actually planning it out and telling it what to do. So now you want to see Google come back down into this consolidation and use that consolidation as leverage to go higher and aim for that box again. If we don't, if it starts running through here and we start taking out this imbalance here, and then we start digging into this candle, you're looking for the next box would be down here inside the larger range. So I want to see this consolidation now provide a level of support to revisit the box and start digging deeper into that. And again, your objective is you don't want to lose 50% of the consolidation here. If you start losing this, then I'd be a little concerned that we're going to run back deeper into the range down into 150, 153-ish to 155. Oh, somebody, I was on a channel last night. Somebody was looking at Adobe. I'd like to see Adobe get down into the 460 range before considering anything there. We haven't even got nat gas on here, do we? Craig's like, where's the nat gas, man? You said we do nat gas. Okay, let's have a look at natural gas. Look at UNG. This one will be NG. The UNG is sitting flat still. I like this little rundown in here on the hourly. We still have a little gap down here that has yet to be filled. We came to the consequent encroachment of that beautifully and then gapped away or literally ran away from it. And now we're retracing back down. So this is all buy side here and we had sell side there and we're gapped. So there's a void in any price delivery here. So now we want to be able to come back down and fill that gap in and see how we act. Obviously, you got those lows, and then you got these equal lows way over here, relative equal lows. So I'm heavy on gas, natural gas right now, and we're looking for a return back into this gap here. We'd have to get above here to start thinking about going higher. So that's on UNG, natural gas here. Taking out that high, there's the imbalance. You ran through it. You don't even get a chance to get into it. Look at the next one, trades through it. You don't even get a chance to get in on that one. And we're already into the discount portion already. So you wait now. So unless you get something that returns back up into here and you find support off of that to go lower, I would say wait for this low to get taken and see if we can use these three candles to go lower. So anything trades back into that little gap right here or this candle's low, anywhere inside that candle, those candles there and that imbalance. So it's quite a little range on the way back up. It's a 1 minute chart, so it's not that big a deal on an hourly. But if you want to see this, take the low and use it for support here now to go lower. This is really choppy here, my finger on this touchpad. NQ gonna hang here till the open. Back to the morning voice this morning. You sexy DJ do. that's the morning one. My wife likes it when you roll over in the morning. Go, good morning, baby. She, I love your morning voice. Oh, is your volume this time? All right. Everybody check your volume. I've got mine maxed out now, so it can't possibly be from my recording anyway. Zach, good morning. Russell, good morning. I am looking for sub 13 on UNG. Yes, I agree. That's what I'm looking for as well. Sub 13. I want to see. This is too flat down here. I don't think they're going to leave that untouched, my friend. So I do like the daily on this. We got all these relative equal lows below us. So look at how we came right into this imbalance again, hey? Right down there and just shot out of it. And then gapped right back down, and we're not done down here now. So see how we've ripped through here now on this natural gas? You don't get any opportunities to get on this reversal here above this high. It's just literally reversed on you, and we're already through the discount. It's driving down quick. It's not giving anybody, it's upsetting the shorts here and not giving an opportunity to get back in on that. And these guys who are long, who are aiming for higher highs, it's running back against them, and now it's taking them out. So keep your eye on those there, Craig, and see if we can get a. You're not a shorter, are you? So you're a going long kind of guy. You're not a short guy. You're a long guy. All right. Where are we back? Let's get back over here to our NQ. We have equal lows. Candle gets above it, comes back, finds support at it inside the range, run back up. That's a 15-second chart. I do like the 15. I see why my friend Hadi loves the 15-second chart. It really does give you the early warning sign that there's something coming your way. Um, I yeah, guys. Some guys are looking at the Dow Jones here. I'll show you the Dow. Yeah, see that? I like that big. I just feel like that Dow is gonna drop like a stone. It's just gonna come hammering all the way into here. It's gonna drop a couple of thousand points. But I don't know that for sure. But like yesterday, I told you yesterday was going to be a big drop in Nasdaq, and you got your Nasdaq low yesterday. So I do like Dow to make a nice drop. I'm just reading some of the stuff posted in our channel here. Trying to note how prices in current range. Still don't understand how the election and the results they can affect the market. Hedge funds close positions and wait. Okay, I'm all caught up in my. I'm looking at sub 13 waiting oil. Ollie's here with us this morning. Good morning. Good morning. And Campione is with us. Good morning, Campione. Oil makes a little move. Reverse inside the reversal, down inside the range. There's more than 50%. You would have paid yourself here, move to break even. And let's see if we can get some support off of here and start coming lower again inside this range. If we can get above here, then I'm looking for look for swing projection for higher prices in oil. Yeah, ICT says don't trade. I totally agree. There could be some, even though there's clean setups, this is kind of like the discipline you give yourself instead of being that cat that chases the mouse. Even though you see it's an easy catch, this is when you just lie back there in the sun and let the mice run all over you and come up and give you the finger and leave. You just say, yeah, yeah, whatever. I'll chase you another day. You just sit there and enjoy the sun, bask in the glory of your winnings for the week. Don't tempt fate. If you find yourself, this is really kind of a good psychological way to look at this now. You say, how many of you are actually You see a nice little setup, and there you go. I'm still going to take that. There's no reason why I shouldn't take that. There's many reasons why you shouldn't take that. Uh, just for the whole manipulation of the market, because there's going to be a time where you'll put your finger in there and it'll get bid off. I watched a reel the other day, kind of pops into my head, how the market is. This guy is poking his fingers through this cage and he's trying to pet this lion. This lion's looking at it, trying to lick his fingers, and he's petting the lion's face, and the lion's like clearly irritated with the guy, and he keeps dodging, getting bit, and then all of a sudden this lion gets a hold of his finger, and it's a tug of war, and you can imagine who was the winner of that tug of war. This is the kind of thing you see right now. I think it might be an easy run, but suddenly if it snaps against you, you lose your finger. How's that for a nice graphic start to your day? The paramedics were all the same. We can sit there and have a big gory call, go and have lunch and talk about the call while you're eating lunch. It doesn't affect us at all. You think everybody has an ironclad stomach. So anyway, here's your reversal here. We're right back inside. The bodies are respectively inside of this fair value gap. And we've got a swing with imbalances right here. So you've got to keep them in mind when you consider this could be running away from this level now. So we've got one that says high, one that says low. Which one are you picking? If you're still going low on that and you've missed this imbalance here, and you've missed this imbalance down here after taking out a low, then you're not watching carefully enough. Day before NFP, I will try to take my profits and run. The question is, what do you do? Question is, what do you do, paramedic, to get that finger back on his hand? Uh, we do not do Heimlichs on lions. I'm sorry. Come on. Come on, you let that finger go. Now, a true paramedic would have gone in there and given the lion a Heimlich maneuver to get that finger back for the guy, but there's limits to how much I'll dedicate myself to the recovery of the patient. Okay, so again, when you're looking at these levels, now ask yourself which one's the stronger of the two. And it's you can't go in with a gambler's mentality. And you see people drawing these trend lines in here right now saying, oh, the trend line saying, forget that trend line crap. Yes, you can draw lines to add a coincidence. You can see it working like that. And if you are a trend line person, then my apologies. Here's how you can make your trend line stronger. You look for this imbalance. You see it comes back, finds support inside that imbalance. Again, breaks through that low, stays below the low, stays below, and it's starting to work below this low here. We've traded through that little imbalance that was here. We've literally closed on it, opened up on the high of it, and now we ran through it. So you're looking for lower prices. So if we do come back, you trend line people would like to see that continue coming back into a level that provides support. So you don't want to see this get above here. So the trend line people will be supported if we have this run above here, right? So now you're deeper inside this range. Back to the consolidation. NQ has left me with only one finger left. That's the stroking the lion, man. What's the 1 minute chart? Let's look at the 15-second chart. You know, this is where my buddy Hadi is hanging out. He's like, hello, gentlemen, welcome. Welcome to the house of Hadi. So here's your imbalance, always look for these imbalances as well as fair value gaps. An imbalance, you trade below it, and the order block here, you trade below that, come back up inside it here, continue back down into, take that first one here or this one here, and look at your range. It trades back up and through, looking for imbalances, and there's one right here. You gotta stretch your chart out to make sure you see them all. Right. Maybe not there. Wait for that candle to get taken to the upside. Now you've taken that out. It gets taken to the upside, gaps up, comes down, gives it a kiss. Look for that upside objective in here again, right there. So if you're running for internal range liquidity, you're already above 50% probably. No, probably not. No, right. There's 50% there. You literally came down, give yourself an opportunity to go long there into internal range liquidity, aiming for that one up there. You hit 50%, 62%. Look for, you see how this works? See how you go, you're in a discount portion. You come off these two candles here, you hit them, you start to run up, hit 50%, quickly move to break even, take a portion of your trade off, even if it's that close. Runs to 62, now move the rest of your trade to 650. It runs up to 70%, move to 62, take a portion off there. That's optimum trade entry reversal. Comes all the way down, takes out these lows. How delicious is that? So even if you're in the wrong direction, you manage to nibble a piece out in that. That's why that fib tool technique I show you is dynamite for internal range liquidity hunt. If you don't know what order blocks you're aiming for, it is a great way to protect yourself and take a portion off and pay yourself real quick inside a run that could turn against you really quickly. It is really the best way I've been able to see to manage internal range liquidity hunts without being really strong on all your PD arrays and just allowing the fib tool to scale you out. So you want to see this low get taken out, Derek? Yeah, that would be that's the unicorn trade right there. We have market maker buy profile, market smart money reversal, low risk sell, accumulation, distribution, second level of accumulation, and slam all the way down. So you're looking for this original consolidation now to get taken on the downside. Downside boxes, I'd like to see this little box right here get taken. So 620, 69.20. I'd like to see that get taken on the downside if we're going to take out this consolidation. If we now get a run back up inside this range, I'd like to see a return back into 50% and then continue going back lower. So look at this range here. It doesn't always run for the what we're looking for. So you can take this one or this one. I'm going to take the big one first and say, does that bring us back into this candle? Last down close candle here. 50%, just popping over 50% to continue going lower. There's your pop over. So let's see if we get that. So your one run you're looking for, Derek, getting back to the new day opening gap down here again. That'll take you below that low, I think. Yeah, that 830. Or 850. we get that. This is the time where you start to say, this is what I want to see. And you don't have to put any stress on your trade now. You can just say, I want to see price action move to this point here. That's when you put your crosshairs on there and study price action without the stress of worrying about trying to make a buck today. Like really, this is you've got an opportunity now to play inside a market and just and don't demo trade it because demo trading is just scratching that itch you want to get in the trade. Study it. Just watch price and say, this is where I want it to go. Why do I want it to go there? Where does it fail for me if I'm wrong? And then how do I get back in sync with the market in a 15-second chart or a 1-minute chart? And you'll know if you understand price action really well is if it's not going in the direction you want, don't give up on it. Just say, where did it fail for me and how do I get back in sync with the market again? Because if I was live in this, I want to know where my fail point is. Edgar, buenos dias. Buenos dias, Edgar. Buenos dias, my friend. Dave Barry, good morning, my friend. Good morning, good morning. Craig, I traded the crude oil breakout this AM. Good stuff. Crude oil breakout. Oh, this is crude oil right here. Oh, that was crude oil I was talking about. Geez, I don't know. I thought I was all this time I was in thinking I was in Nasdaq and I was in actual crude oil. So you're looking to go long, Craig, or short? Because we still got this consolidation for market maker sell. We usually work through the original consolidation. So just be careful that you don't get 69.20 taken on the downside. There's 69.20. There, it's taken, now it's heading down. It's going to take that consolidation on the downside. We've dug all the way into it now. Or stand by. I could be wrong. Yep, we're above here already. We could be back in sync with the we said it could come back into. No, it's definitely through it. Look at this. Tell you that's why it's a NFP week. Not for people, not for players, not for partners, not for patrollers, police, paramedics, not for traders, not for nobody. Well, there's the, oh, sorry, there was the 50% right there. So it actually ran that out first. Okay. And now you've got, Craig might be in for a nice little, there's the run above 50. We have a new range now. So we've broken this little this spot here. We have a small reversal right here. We've traded above it. We've come back inside it and we've pushed higher. So Craig, good for you, man. If you are actually in that, good for you. That would have taken me out for sure because I wouldn't have expected it to come back here just yet. And it just dropped below. Look at that, 1 penny below the close below the 69.20. That's the one that would have thrown me off right there. Let me make sure I had the box in the right spot. Yeah, that was 69.20. So that would have been that would have taken me for sure. There's your 62%, just shy of 70. Now we could get what we were looking for here to run up to here. Now this is what I'd want to see if we had originally kept it right here. Look at where it would be right now. I don't know why oil always tends to lag around with me here. See that? If that was our original consolidation that we were looking for, we wanted to see this thing shoot up into here to 70% for the reversal, but it did this little dip down. This is why this such an unpredictable kind of a Thursday, Friday. So anyway, you got the reversal here, run back up 50%, move to break even, take half off, move to 62, take a portion off, run it up to 50, and you've made 40% of your trade in here, and or actually 90% of your trade is off there when it comes back and takes you out, and 10% is up there. So now you want to see now there's that 20 getting taken. See, just a little bit of mucking around what we wanted to see, and 1 penny difference. 1 penny. I'm gonna have to put that on mute again. So that's what I wanted to see, but I didn't want to see this 1 extra penny down here get taken just yet. And now you can see that the consolidation looks like it's going to be threatened to be taken on the downside now. Tristan, good morning. Ollie, NQ levels I'm watching below 261 is potential reversal zone as bullish. Fair value gap below. And the you said 261 is the bullish zone. This is it right here. We have a little imbalance here at 262, 263, another one at 266, and this one here at 274, 271. We traded above it right here, came right back inside it right there. Okay, I have to shut this one up because it's chirping in my ear. Mute notifications for 3 days. Work. All right. So we've come back into this fair value gap here. You want to see this candle get taken on the upside on a close, and then use that for some support to go back into this range here. How many people are jumping at the bit to buy something here? Or are you studying price? Just give yourself a break. Here's the Thursday first fair value gap above you. So the upside potential is right there. We've got a reversal here on a 15-second chart, on a 1-minute chart. We want to see it clear here and get back into that fair value gap above you. So that other one I showed you was the 15-second chart, the one above you as the first opening or first presentation. And on the 1-minute chart, your first presentation is sitting right here. So if this kicks off of here and drives back down again and you don't get that higher one, or do we drive through this, find support back at this and start running for these equal highs above us? If we do, we're looking for a little box up here around 401 to 390 something, 392. There's a nice little return into that reverse. Now you want to see that push higher. I'm looking for higher prices before a definitive move lower, but who knows? And I wanted to see the 830 low taken to suggest it is going higher. Well, there's your consolidation reversal. Takes out the original consolidation. Now, if we're using this original consolidation to go lower, then that's the fear of not getting a retracement back up into there, is just using that as leverage to go lower. Right off that box we're looking at down here, that would be the box you'd be looking for. We've traded through it, we've come back inside the box, and now we're going lower. So what's our oily oil doing? It took out the lows again. Did it take out the... Nope, didn't take out the consolidation yet either. And we get another imbalance. We've taken out this low, imbalance, body trades above it, you're back inside it, got back up, and we're through this imbalance on the upside. Work that, body trades above it here, and you literally gapped down. Oh no, you opened here, came down inside it, tapped that imbalance one more time, and then start running for the highs here. So we're back inside this range again now. So you can see how the reversals are happening, but you can see how quickly you can get beat up in it if you're chasing price. But Craig's no slouch. He's been doing this for a long time. Thank you. What a sell-off. So go back to our Dow. Is Dow doing a little big dive down yet? Mock me, mock my words, folks. I bet you we're coming down into here. Not that you want to put a lot of faith in that, but it just feels heavy. Just feels like it's gonna drop. ES is getting support off of this reversal right now on a 1 minute chart. Look at this 1 minute chart right here. We've got a reversal happening. We're back inside this range. So if you would have paid yourself 50%, 62%, pulling the fib tool in that range there, and you'd have to pull it from the high here. So there's your reversal. You're in it, 50%, pay yourself, move to break even, take a chunk off, and wait. If it comes back and takes you out, and it trades back into the disc or the consequent encroachment of that SIBI, long again, start the whole trade over again, stop losses down here. If it moves 50, vice versa. So you're going to get paid in here multiple times. Every time it comes down, taps you, hits 50, pay yourself. Comes down, load in, pay yourself. Just keep paying yourself every time it hits that 50. Not that you would actually take the trade. We're not actually taking the trade, but that's the example. I want you to watch that level and watch that repeating model. See how many times it would pay itself out inside that, all the way down into that point right there. The moment it closes below that, your stop loss is taken because that's the fail safe. If we get a body below that, trades back into it, all this stuff is over. We're going lower. The pound was sitting flat, and we said the euro was on the way up, right? So how did the euro do? Oh, look at the euro. Right up to the weekly, new week opening gap. And even this is chopped. I got nothing in here. It's still kind of messy here. Trade it back up inside it. Look for this range. So you'd be looking for from here to here. Internal range liquidity hunt. Uh, Nothing down here. You'd look for this fair value gap to fill. If you don't have something on this side, look for this side. So you're looking for fair value gaps as objectives. And if you take out that low, then you're looking for consequent encroach or the mean threshold of that candle. Rejection block, wick. Oil. Look at that, just mashing you around, hey? This is when you start to look back and go, oh, it's so, yeah, we could see potential setups in there, but these little triggers that kind of throw you off where you expected price to go, and it just keeps reversing on you. That's the chop of NFP. The markets just don't get very clean anymore. So we're back off that regular trading hours of first presentation and looking for lower prices. So as NASDAQ starts to push down, what's going to happen to Dow and all the others if they follow suit? If they're all in alignment with each other, we get a down day. Now let's look at Dow for on the hourly basis and see if there's a setup in there. Again, these are great study opportunities, isn't it? Not like I have to rush in and buy something. Even if it looks like super clean, you go, wow, that looks great. We have many days left. So consolidation here. We have a swing low, takes out this high here. You're looking for this order block to get traded to. Your upside objective is obviously the highs and 50% of that wick and that old high there. It goes up, takes out all of those objectives. And then you think, okay, if I want to get back in this now, inside that range, that's close to 50% of that range already. So do I want to be trying to buy a premium to go for a higher premium when it already ran up into that level? So you see, as it starts to come down, you go, oh, we have a fair value gap here, and we've now taken out these highs. We have a fair value gap here that's taken out these lows. So I have one that goes high, one that goes low. Which one do I want to gamble on? Because that's what you're doing. You're gambling on it. You wait for one side to get taken to tip the hat right there. This side gets taken on the downside, comes back up inside it for a short. That's the patience you have to wait. And if you're gambling, do not reward your gamble with like, I knew I was right. If you knew you were right, just wait and say, yeah, I got confirmation. Make it a boring thing. Like, yeah, I got confirmation here. I've traded below that level. I've come back into it. Now if I get a short off the consequent encroachment of that, I'm happy with that. That's a 1 hour chart. So that's Dow Jones. So we're looking for Dow to continue going lower. If you were on a 15-minute chart with Mr. Dow, Mr. Jones, Mr. Jones, we have a high taken. Oh, my brother's making Belgian waffles this morning. I can hear the blender going. All right, so we've got this high taken here. Look at that reversal. You see that right there? So you say, I want to see it trade below it on a close, and it takes it right here. Now, do I get an opportunity to get in on that? No, I don't. I wait for this market structure break. We have a market structure break here. And then look at this. We trade right back up into consequent encroachment of that wick. And waboom, down you go. Clearing out this downside. So confirmation that we're going to continue going lower is when this downside gets taken. And it does right there at 8:30 or at 1600 hours, sorry. On the, when was this? This was yesterday. Came back inside and then ran all the way down today, and we're still going lower. So We had lots of confirmations along the way to tell us that this market was reversing. Look at this here. Nice consolidation, nice open gap, traded below it right here. You don't get a chance to get in on it. Wait for that candle to get taken on the downside. It does right on this candle here. It comes back up, gives you an opportunity to get short there, and you're off. Wait for that candle to get taken on the downside. It does, trades back into it here, and you start going lower. 1 minute chart. Could you got in on that in a 1 minute chart? Let's look at a 1 minute chart. Highs are taken. There's your reversal here. Trades below it. Great. If you can trade back up inside this, then I want to see this candle get taken because I'm trading internal range liquidity from that high to that low. So you wait for it to return back into that level. It does beautifully, I might add, and then rolls over. Trade your internal range liquidity back into the box I'd be aiming for, which would be right in here, right just below that consolidation, or in that consolidation would be the box, and it trades inside the box for a while. Trades below it, then you use the consolidation as a CAM Model 1 entry, CAM Model 1 for a short. So many opportunities to see these reversals. So don't get hung up on today not catching a trade. Study price, man. I tell you, you do yourself a favor in days like this if you just keep your finger off the button and just study price and just draw lines on your chart. Sit in a 15-second chart or a 1 minute chart if you don't have the 15 seconds and just practice and see how quickly it can throw you off. Say, whew, I'm glad I didn't take that trade because I was wrong there. Or, yeah, that would have been an awesome trade. Document that, note it, put it in your diary as another confirmation that your trade model works well and you're starting to read price action and you're staying on the horse all the time. That's what you want to do. So now we're getting a body below here. That's good. I want to see a body. This day close below here. Use that open or that close or gap or wick as an opportunity to push all the way deeper into this range now. What do we got here? NQ weaker versus ES SMT. SMT. I don't see an SMT here. This one's, oh my, mind you, I guess we can say this one's making lower lows, higher low. Hasn't quite made this down here yet. It's definitely got a sell-off run now. So once that gets below there, you're back in sync. But I think they're all making a plummet down today. They've all made that run. So I wouldn't say it's SMT. I guess overall you could say it was, but today they're all in sync, making a run down. And if Dow Jones or if NQ has to catch up with taking out its previous lows here, it's got to get through here and through this level here. If we're looking at these, this hasn't taken it out yet. This hasn't yet. So Dow is the heaviest one out of the three. So if you look at this day on October 24th as the day that made the swing low, swing low, swing low. This one, Dow has taken that swing low out already, and the Nasdaq and the ES haven't taken it out yet. but we're all heavy right now. So the potential is these running for that low. That's quite a lot of running today, especially if Dow's leading the way. And this is where I'd love to be in your head thinking, oh, then why am I not in this? Why am I not running in this? It's a golden opportunity to make money. Because there's, like this day, we'll have many other days that will give us big ranges like this. So see if you can fight the urge to chase your emotions. Or do what you want. Chase after it. Who am I to tell you what to do? See how we've run above, come back inside the order block. That breaker right there takes out this low, comes back up through it, trades back to it right here, runs for the high, takes out that high, trades back to it again, start the trade over again, and you're running for this high or rejection block, and then relative equal highs above you. You have a body getting through this one already here. You want to see that whole price now and start marching higher. Is that 3 dives in NQ? Like this, 1, 2, 3. Are you talking about that for like the 3 Indians pattern dive? Usually you'll see a lower low, unless you're looking at this as 1, 2, 3, and then the reversal. In that's oil. In NQ, you mean? 3 dives pattern. I don't see 3 dives. I just see 1, 2. This could be your projection right now. Come on. So there's 3 or 2 deviations. So that's 1 to here. There's 2 standard deviations lower from this one here. 1 deviation, 2 deviations. So 3 is actually 2. So if you're looking for 3 standard deviations, oh my God. I used to love touchpads. Now they drive me nuts. So if Derek loves to do these deviations with 2 to 2.5 is his objective. So there's 2 right there, right on the money. So if you're looking for 4 standard deviations down here at 20.57. Come on. This time when I want to get a new computer because it just seems to process really slowly. Got lots of lag in here. I'm right next to my brother's router in the basement, so daily chart through dives down. Okay, sorry, let me go to the daily chart here. See what you're looking at. In NASDAQ, you said it was a 3 dive down. 1, 2, and this is the 3rd dive down is what you're looking for here? Is that what you're looking at? This is a 3 drives pattern. Up, 1, 2, 3, reverse. So that could be the 3 drives pattern for the Indian thing, or you could say this is 1, 2, 3, 4, without, but you wouldn't incorporate this whole thing here. So this is, I would say, as long as you're not making a new low, you're looking at, oh, June, that's not either. I'm not sure about that three Indians pattern and how valuable it is. I know Michael's referred to it several times. I just look at what's the price doing right now. SMTs. I don't look at any of that SMT stuff, which I'm sure I've been resistant to studying it because I don't think it's really going to add a huge. Because I'm only staying in that one asset class anyway, and I can tell whether or not it's going to turn, regardless of whether there's an SMT or not. I can see it turning, and that's one asset is all I want to sit in. I want to chase multiple assets, though I do like oil and sometimes gold. What is gold up to? So we've taken that low. We're expecting in gold on a close. That was the way down here. We definitely closed below that. So now you got to go into gold and say, was there an opportunity for me to see gold or reverse and get in on it in a lower time frame? So I could have caught this on the hourly uh, within that hour there. I want to see this market structure break and see if I can find it on a lower time frame and see if I could have got in. Well, on a 15-minute time frame, you're run above these highs. There's your reversal here. So for you, you might want to say, here's the range I'm looking at, and that candle right there on a 15-minute chart. Let me make this bigger. All I'm doing is studying price today, so I'm jumping around between charts. So if I'm not staying on the chart I apologize. I'm not paying anything. I'm just studying price, and here's a great opportunity to do that. So anyway, right here is the reverse. There's that up close candle that you want to see with a market structure break. If we get trade below that, trade back up inside that candle in that wick or that imbalance there without taking out the high, I'm looking for a continuation on the downside. Once that's been taken with a body, it gets taken here, trades all the way back inside that right there perfectly. Then it comes back up, hits it again multiple times, starts to trade lower, takes out, or doesn't take out the low there yet, trades all the way back up. The bodies still respect this. See that? Wicks do that, scare the crap out of you. Is it going to take my stop loss? But it comes back and again freezes on that level, saves you, and that's where you really get to find out whether or not you trust your fail safe, or whether or not you trust your stop loss, or whether you trust these arrays. Multiple times you have to see that get hit before you realize how good it is. And look at that. See how the bodies respect that? Wicks do all the damage, but they respect it. Drop lower. You want to see this find support. Again, once it gets below it, come back up. We're all inside it. Get below it. Come back up inside it. Right here. Look at there. Now you start to really see it hold. Price rolls over. You want to see this break through here now on the downside. It does. Comes back up inside it here. Nicely. Mean threshold of this candle. You want to see that give way right here. It comes down to the mean threshold and starts wicking through it and start eating into it like this. Remember I was telling you about, you look at this candle as the floor and you want to see, are we drilling into it? Drill, drill, drill. We're making it weaker and weaker. And the mean threshold is that the breaking point. It runs right through it, doesn't take out the low yet, comes back up inside this range for another retracement back into this fair value gap here, and then finally drives through and takes out the low. Because the moment you see that mean threshold get taken, you go, oh, there, we're going lower. We could do a last little retracement back in here before taking out the lows. But let's say you were like, no, I'm not waiting for all that crap, Darren. I don't believe that. I'm going to wait for a good market structure break. I want to see these lows get taken first. I say, okay, so if we're looking for this low to get taken on the downside, right here, it gets taken and then trades back up to no opportunity to get in. It leaves on you. So you can see that there was an opportunity up here. And did you have the patience to wait inside that with your stop loss sitting right there? and your fail safe ready to be triggered the moment a body trades above it and it doesn't, your fail safe holds, your stop loss gets squeezed, fail safe holds, and then finally rolls over. And now you're laughing, you're chuckling to yourself saying, God bless the fail safe, right? Anyway, that's another example of studying price action, man, for gold. What's Google up to? Where did Google go today? There you go. That's good. We wanted to see if it would come back down into here before reattacking that. Attack it now. Go ahead. Attack away, McDuff. What's Adobe doing? Does it go lower? I'm looking for Adobe to go lower. Getting near 3 or 2.5 now. So you're looking for a reversal now. We're looking for, I don't see anything in here of significance. We have to take out that high there. There's a small little, there's a tiny imbalance right here. If I stretch this out, you'll see it. See that there? We've traded above it. We've traded back inside it. So there is a small reversal inside this range here. There's nothing up here though for a box to key off of. So you got to go with the fair value gap inside that range. 50% of that range has already been hit. So that rolls over now and keeps coming lower. You always got to be pulling your fib tool inside that. You can't be overshooting your PD arrays. There's 50% right there. I'll keep an eye on that. So there's a little tiny reversal right here inside that range. Pay yourself, move to break even. Again, just as a practice, you pay yourself halfway trade to be off, you be at break even, and then you just quickly bring that right up to 50% the moment that hits 62. And you're inside this breaker here too. So right now, the stop loss would be sitting right there at 50, 62, right there. I would have taken you out. So right there, you would have made inside that range, internal range of liquidity hunt, inside that small thing there, enter in right off that imbalance right there. So that's 154, 169. So there's 15 handles there at half your trade. Then you take a portion off there, or just move your stop loss up. It came back down and took you out. So you would have had all the way up to 181. And then if it takes that high out, you can get back in and start playing higher, running higher again. But if not, if this reverses right near at the optimum trade entry reversal inside that small range and starts driving lower again, even on the wrong side of the market, you're managed to save your ass there. Again, that's an amazing way, easy way to manage internal liquidity hunts once you have an option to get in a discount. Previous week's low not taken. NQ. Move that to the side now. Let's bring our friend Mr. Carrot into the play. I do not want to see that get taken out, so we'll put the carrot on the side right now, and we'll wait for our little, see how that acts in here. And I want this to emphasize yet again how you can trade off of internal range liquidity and small ranges and still make a profit. You can come back in here and start that whole trade over again now. And if it trades back through that on a close, your fail safe is your stop loss is here. Your fail safe is right there if it closes below that. So watch right now. Again, we'll practice it. We're not buying anything. The fact that they're wicking through that now, I don't like that. But let's just wait and see now what happens in the 27. If it gets to 50, you take half your trade off, move to break even, and pay yourself again. Literally closed on it. Now you're wicking through it. I don't like that. Move to the sidelines. I'm out. I don't even like that wick down there. I like to see just tap it and go. So I'd be out. And that you'll have to see enough times that you'll start to go, that's going lower. I don't like that. Before it even gives you the indication it's going lower, the warning signs are those wicks that pop below that level. And we showed you those yesterday. When you see those wicks, if it just comes down, taps it, and you see it snap off of it, that's a good sign, right? But if you see wicks, it stops there, and there's little wicks that start to probe down in there. It starts to give you the hint. I'm thinking about going this way, peel out. That's why you hear me say, I don't like the fact that we're going down there into wicks. That's the probes. And here you go, down. That low's now taken. And see how you get an opportunity to pay yourself inside there. Optimum trade entry reversal again for continuation on the downside. That's why you pay yourself on the way up. Fid pill works awesome for that. And that's right off that little imbalance right there in a discount inside a small range. And it's like super sniper liquidity runs. And that has to be your objective, not way up here. It has to be the immediate range you're in. Otherwise, you'd be like, oh, that doesn't work. Well, you missed all that opportunity inside there. And the first one's 15 handles all the way up to 81, 82. From here, that's still almost 30 handles. Just up there for one portion, 10% of your trade. Anyway, look for this candle here to provide support now, which would be institutional order flow entry drill. Just pop it up into here and start going lower. But it can run all the way back up into here, inside these two candles. Good wick lesson. 126. There's the little pop-up. Did we get above it? What's the high on that candle? 35.20. Oh yeah, we're in there now. There is ideally where you want to see that stop. Reject the consequent encroachment of this SIBI. Also, the close of that candle. I think it was just shy of the close. Now let's see that react off of here and come straight down. Leave this portion open. And if it takes that low, I'd move to break even because I wouldn't want to see it revisit that again. And again, it's what you want, not what you fall victim to. And the more it starts to eat into this thing, the less excited I get about going lower. See how we're digging all this? That's ideally where you want to see it hit it and go lower. Didn't do it. I start to lose my motivation for that because now this becomes the reversal right here. So if we had a body above here, no, you keep your eye on that. You say that's the reversal. So watch this close here in 30 seconds. We can still come all the way up inside this. Remember I mentioned it. We can come all the way back up inside that order block, which could bring us right the way back into the fill of that fair value gap. We're just shy of filling that full fair value gap there. This is nice reaction off of that. We're at 8 seconds. We'll see how we close inside here. Above it, below it, or inside it. You see how we're at the consequent encroachment of that SIBI? The bodies are respecting it. Wicks did the damage. We came back down to the bottom of it here. So right now we're inside it, and I want to see if we start to close this candle above this. If we do, then we're back inside this range, and we're aiming for this little objective up here where the carrot would be. Right in there. And they hit the carrot. You took the carrot. All right. So now we want to see it get above here. We have the reversal here. Body trades above it right here and through this one here. So if we can't get in on this trade, this old low or this SIBI here, you look for this carrot here. Sorry, this carrot, this candle right here on a close. Skewer our carrot. Now you watch, see where that sits. Pay yourself at rejecting blocks. Absolutely. So we're in our carrot again. Good. Now I want to see it come back down into here. We'll put our carrot over here for the next one. Right back into that candle's wick. Right there. Give me some carrot. Come get you some nibble. Right there. Good. That can come all the way down into here. That's fine. And it can actually come down into the top of this fair value gap here. And that SIBI there one more time. I'd love to see it. It's stronger for me if it just uses this wick to go higher. But we can get all the way down into here. Stop loss would be sitting right down in here at the bottom of that cluster. And then my little carrot will go above this high here. So we do not want to see it break below here. So if that's where you don't want to see it go to, and you want to get a discount inside this range, do you want to purchase it at the extreme high? Unless you're sure that it's going to run deeper into this range, which is a really good discount. You go, how is it acting off that wick? And look at that, 50% of that wick. Nice snap off of it. Now we're looking for a carrot to make a nice little run higher now. Taking out the high. Now you start to pull your fib tool on the next range up, and you start saying, "Ooh, where do we go next?" You guys are going to start loving carrot juice. So 50% of the wick, you don't want to lose any more than 50% of that wick. The stronger one is just half that and start snapping off of that. Again, it can roll all the way over into here. You do not want to start seeing a body get below here, because now see how we've got this reverse, or this run above the high, run above a high. Oh no, it's actually equal to that high. We do not want to see a body get below here, because now you're back inside this range again, and this is a downside objective where that little line is. But if you want to go higher, then you're looking for a nice discount inside this range to go higher. That's that debate I just gave you about, do you want to pay for a premium to go for a higher premium inside this range you're in right now? Or do you want a discount inside this range to go higher for a premium? And what is sitting in here that would give us that discount? This order block, fair value gap, not quite a discount yet, but this one here, if we reach back down into that box there, that's a nice little discount inside there to run higher. So we have a higher low, this is a lower low, and a higher low on this side. That'll give us a short-term swing for a continuation on the upside. So we'll see how it acts in here right now. We've already eaten through half that wick. No bodies below here yet. Back inside this order block again. We're back inside the consequent encroachment of this up close wick. Take that highest wick, split it in half. You want to see that whole price right there. And exit north. Bull flag people. Retail's going, it's a bull flag. So for those of us who understand what we're looking for, this bull flag, you'd say, yeah, I'd love to see this bull flag take off right now, retail person. They're just looking at it as it looks like a structure of a bull flag, but they don't understand what it's keying off of, where it finds its support, and where you want to see it hold price or where it rejects price. And then you start saying, my bull flag's going to fail. If we start closing below 50% of this wick, we're going to start digging back into this range. If that wick holds price and we can get above this again, then we're looking for the carrot to go higher. Will it go the rest of the way to 2079? Not right now. It's not going to get down there right now, Derek. It's still sitting. It's more bullish than bearish right now. In order for that to go bearish, you'd have to lose this fair value gap on the downside, on a close on the downside. I want a mentor that will tell me if price is going to take out that low today, says Anonymous. Are we going to take out that low today? Yeah, don't forget, we've got the run on 11:30 and 12 o'clock. We can come back and revisit this. So you may get that, Derek. But right now, I don't see it. Right now, it's still supporting a slightly higher run inside that range, and 50% is putting us right here. So if you do see 50% and a reversal happening, not once we take these highs out, Derek, then you can start looking for a gunning down into here, and then potentially a run back into the 79 you're looking for. One day I will get it. Watching natural gas. 10:30 natural gas report. Looking for a wick down in nat gas. Look at that. Running for these lows again. That's where we want to see it get down to. If you want a sub um, $13 entry, wait for these lows to get taken and then wait for a reversal. Wait for a reversal on the daily or the hourly. Once those lows are taken, that's when you hunt for your gas run, Craig. See how this first fair value gap presentation? So I went through it, through it, through it, poke through it this side. So you say, as soon as it gets through it on one side, you go, great. Now I don't want to see it break through here. Great. I want to see it keep going higher. And it busts right through, takes out your stop loss. You don't even get an opportunity to show you that. Remember, see that warning sign I was talking about? The little wicks down, wicks down. That gives me the warning sign that, oh, is this going higher? Is this going lower? When you start getting these little pokes above saying, I'm going higher, then it starts giving you this little poke below, poke above, back into order block. You start saying, look, it can go higher, it could go lower. I'm stuck in this. I'm going to wait for structure break above or below, and then I'll get back in sync with the market. Otherwise, this is just going to beat you up in a small little consolidation, and then you're trying to hunt these wicks and saying, what's the hint? What's it trying to give me? Is it saying, oh, no, it's changed its mind, it's going high again? Oh, no, it's going low again? Well, finally, it busts through that low, gives you a displacement candle and says, hey, look, I'm going lower. So it runs back up inside that regular trading average gap one more time, doesn't poke through it, and finally gives up a little run lower. And we're looking again for these lows. Rejection block first, and then the lows. I'm sorry, I lost that. All right, so we're back into that little fair value gap we talked about. We did not want to see a body close below that. It did right there. You see that? It trades back up right to the edge of it right there. And now we're going lower. So now we're inside this range. Now if Derek wants his low, we got to get through this low right here. So we didn't go any higher than we'd hoped. So clearly not hungry for carrot. That's where it fails for us. And we're back in this range. So that it failed right there. What's the high on this candle here? Let me get this thing out of here. The high on this candle here is 1735. The high on this candle, 17125. So we've actually dropped below. We don't get a chance to get back in on that little imbalance there, but there's the indication we're going lower inside the range. And now we're back to the box. Watch this line. Now, here's your debate. Do you use this now to go higher? Because now you've got your discount that we're looking for to go higher. I would not want to see it get below that level. If it closes below that, I'm out of the idea of long. Before this even closes in, I'm out of the idea of long. It would have to break this high again for me to be more excited about going long again. I don't care. I was just typing for an Oh, Derek, you cracked me up. Anonymous popped by my house and said, hey, could you ask this question for me? Sure, I'll type it in. One day we'll get it. I'm bad. Don't say that to yourself, Craig. We don't talk to ourselves in a very negative way like that. You are an awesome trader. You got to keep saying that to yourself. I beat myself up with that conversation way too many times. I hate that. I'm a bad trader. No, you're not. When you see it, you can't unsee it, man. It'll just sit and you'll suddenly your whole nervous system will calm down once you see the setup. Or you get excited because now you'll suddenly look at the market in a different way. See how we're trading through that candle? We're wicking through that level. I don't want to see this get taken out. All that cluster of candles is now taken, so the stop loss here would have been taken out, but I would have seen that we're running back into that range the moment we broke that low. So there's the fail safe for my stop loss is sitting here. Fail safe's there. You're out of your trade because now you're back inside this range and you'll just wait. Now you want to wait and see if this gives way right here on the downside. So that's your downside box. And if it gives way, then we give Derek and his anonymous friend his run for 79. So there, we've closed below that box that I didn't want to see. Next one is here. So you don't want to see it get below here. And watch the wicks. So now you're looking for those things like those hints, right? So we're starting to probe down in there. So now we give Derek what he's looking for. Bull flag people, we're expecting that to go higher. I was expecting it to go higher unless it broke that, and it did. So now we know early that this bull flag here is going to fail. And sure enough, it does. We're back inside that range. And now we know this range is going to give way now that we're closing below this level here. Stop loss is next, or here the bottom is next. This is why you trade minis. You'll see it, Craig. It'll come. Don't forget you've got all those years of retail stuff that you got to unfix or unsee, untrain yourself. So now you see how that level there, we've traded below it, we come back inside it. So we want to see this provide support here now, all the way up to this candle's high. There's a smaller one up here, but I don't want to see it consolidating in here. But if it does go up higher, there's that upside one right there. I don't want to see, if it's really weak, it'll start to bounce off of here and come back down again. So your X inside is this inversion now. Sorry, I'm just drawing it in there. Look for hour to take out the higher. So this hour is going to take out a higher or low. Oops. It's like gum stuck to my shoe there. So we've traded through it. Now if we trade through it again, we're coming back into this range. This is where you say, I can get beat up inside consolidations again. And you move to the sidelines and wait for a higher or low to get taken to get back in sync with the market. Otherwise, you're just going to get the crap beat out of you inside of this one. Because the small one you've got is the upside objective here, which is right where the carrot's sitting. As your upside inside the range, I still want to see this hold price on a close. And go lower, take out that low. Natural gas. Ooh, look at that. It snapped all the way up. And now we're running for those lows. That's after the news report. You see how quickly they run back and take out the liquidity of people who are trailing their stops low. Whoever's running for shorts and they're trailing their stops, snap back clean them up before going lower. Now you're looking for these equal lows rejection block next. Crude oil is just sitting doing nothing. So look for 1272, 1258. So we have a reverse, takes out these highs, reversal here, body trades below it, doesn't give you an opportunity to get back into it. Wait for these candles here to get taken on the downside in this old low. If we can get back into these, or all the way up into this order block here, which would be right back into that BISI again for a short. You don't want to see it close back above this unless you're in it and you want to see it recover, because then we have this reversal here and reversal here. Then you want to see that candle get taken to the upside, ignoring that wick. So here's the reverse right here, and you've got a reverse right here. So you see how they overlap one another. So you say, I'm going to go long now, or I'm going to go short now. You can argue both sides, so sit on the sideline and wait. You want to see these candles here if you're shorter. If that's your downside objective, this has to hold. Has to hold on the downside. That's a nice little wick snap. I like that. Wick snap. We're trading lower. It's good. We'll get back below here. Keep rolling. Come on down. 20 or 2099 or 299. 15-minute rejection block. Let's have a look at the 15-minute chart. Yes, right here. Oh, you're looking right here, Derek. 2099. 99, good number. See how we're sitting in this lowest box, the magic box down in here? That's where we're sitting right now. Our carrot, we're looking for some draw liquidity here. You don't want to see it get above here again. Now that you've traded up into this, I don't want to see these equal highs get taken now. Otherwise, it's just plain silly buggers with you inside a range. 10:39. So 11 o'clock, we should see a nice little rundown into Derek's rejection block. Kick off of that and a potential run back up. So if you're looking at your rejection block as a potential exit, then wait for the reversal to show you its hand. Wait for that setup that says, okay, now I'm reversing. Otherwise, Derek, you could continue to get that low that you're looking for. So you wait for any one of these opportunities to see it break structure. You say, as soon as it does that, I'm on the wrong side. I can get back in sync. So if you were short in this run, you wait for that reversal. Then you say, as soon as it pops up here, I'm on this side of the market. I can take that short off of there. And now start thinking about going longer. So it's down to a few hundred quid every day, risking 80 bucks. Totally agree with you, Ollie. Sometimes, like today, the market gives you more than expected. Yeah, if you're pulling if you're pulling price, hang on a second. I'm gonna clear my throat. Now, sometimes when you're looking in days like today, if you get some price moving in your favor, it's really I don't know if you call it luck when the algorithm's still playing as we expect it to play, and whether or not we just stay out of the markets in Thursdays and during the manipulation cycle. But like Michael says, there's heavy manipulation. The hand is on the finger on the trigger here, and causing some big manipulation. So if you're winning today, you're playing Russian roulette with somebody, and you have to ask yourself, is this really a place you want to be participating in events like this? You're just tempting fate, right? Because if it gaps down and your stop loss is right where your carrot is and it gaps down below you, that's where you take your loss, not at your carrot. And see how it's hanging around in these PD arrays? This becomes, by definition, high resistance liquidity run. Just the fact that it's dropped into here, it came back in, tapped it, and then it's tapping it and tapping it multiple times. Again, high resistance. We want it to go lower. 98, 99 right there. We want to see it hit the carrot now. If you're not profitable consistently, just lower size and make that the goal. Keep studying, journaling, and watching Darren. He explains it all beautifully. Thanks, Ollie. You'll get it, Craig. We'll get you there, buddy. You look at Hadi, man. That guy's just killing it now. He's got this setup that he looks for, and he looks for it on a 15-second chart, and that's where he gets his hits. And he trades these little tiny internal range liquidities. Yesterday he got a box-to-box run. Perfect, perfect entrance, perfect exit. High five yourself because you not because of the money, but because of the setup and you follow the algo exactly the way you wanted it to. That's you can't ask for a better setup than that. All SMCI auditor just dropped them because they don't trust management financials. Is that with the natural gas you mean? Yeah, that's all fundamental stuff that does not even remotely play into my decision. I don't care if the president's having a heart attack, and well, I do, but I don't want anybody to get hurt. But none of that fundamental stuff means anything. Absolutely nothing. You've never ever heard me call any chart with the level of precision that I can call it have anything to do with fundamentals, news, or any of that other stuff. Not once. It's the same as this election stuff. Until the algorithm starts really bouncing around, jumping all over the place, I don't care about all that hearsay, bubble-headed stuff, even though I know it's a volatile thing. So stay out of the markets because manipulation's there. Wait for cleaner days. And there's plenty of them out there to choose from. You don't have to panic and say, I have to be in this week. Well, then you've got an addiction problem. You've got a trading problem. You just want to, you like the adrenaline, you like the rush. Patience. That's where you have to develop your patience. So, and that's not that your fundamental stuff doesn't work, Craig, because it's obviously worked well for you for many years. So I totally respect people who can read fundamentals. You can sit in front of books. I got a buddy of mine that will read all the financials. He'll go through a market to find out what their asset, what their cap value is. Uh, he reads everything like that and studies it quite well, and he's made himself a lot of money at it. So there is there is a value in it for people who can understand it and have the patience to read all that stuff. I certainly do not. I'm a pure technical guy. I'm a chart reader. That's it. I'm 100% on the opposite side of the fence. But I'm always willing to put my hand through the fence and shake the hand of everybody on the other side. I do not consider myself the only way to read markets. It's just the only one. It's the only way I've learned. So we got your new day, new week opening gap below you is your drawn liquidity in natural gas right now. So your next stop on the train to Georgia is down here, 20 or $2.72. That's your new day opening gap, new week opening gap down here. So we'll see what kind of reaction you get off that in natural gas. And meanwhile, finally making a little pop through. I'm out for the day. Have a great day, folks. See you later, Ollie. That usually means fraud. No, they are AI. When somebody's mismanaging fraud, yeah, they can grind a company into the ground, right? I can hear the crowd chanting, Derek, 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 Derek. Come on, Derek, let's get her. What's the low on that one? 103. We're still waiting for Derek's 99. Good number. Get you some carrot. See, it showed us that we were going to go lower when we dropped below here, but you see how this lingering, this is like high resistance crap. This gave you the indication we're going lower. Came all the way back, still inside the fair value gap, which we accepted. Could potentially run all the way back inside the whole thing. We'd like it to stay inside here. It did. We had a bit of a wick out of it. Um, Not a big deal. Body still respected it. And then we started to grind slowly through it, popping back into it yet again into the consequent encroachment and that level that we did not want to see it get below off this breaker again, reclaim that breaker, and then go lower. And finally, we've hit our 99. So hit our carrot. So we got it, Derek. Good for you, buddy. Got your carrot. Now where do you want it to go? Now, ideally, you want to see if that rejection block's going to hold, or to see if that 15-minute candle is taken on the downside now. Then you look for these reversals. So you see a reversal setting up here. If this one allows that to stay open, we still have that option for a run back up inside this range here. So I do like to see this keep coming lower and creating another little low for us. And then you can see if there's an opportunity at 11 o'clock for a run back into the range we've created. Time and price. Here's where it happens, folks. Spooling at 1050. Here's your 1050 macro. We have we have all these little things that are starting to align over time. So we take out that low over there at 11 o'clock. Then you get the reverse. You can see it all setting itself up right now. If you watch carefully here now, time and price. Michael talks about this all the time, and this is a crucial time. Spooling. Your macro starts to spool now at 1050. We're running for it. We're right close to an old low, or right close to the 11 o'clock reversal where you get transfer or run back into a range. So we'll put our little carrot right here is where I'm looking for that to create me some upside momentum. And if you like our price action study, please feel free to hit the like button. And if you're new to our channel, again, you're welcome. Everybody's welcome. We're drama free here. We don't do trolling. We're just studying price action. We're here to help each other out and see how far we can move people. So we like to study ICT stuff. So now we'll see if that low was taken over there. Oops. I should put a little the low right there. Sell side liquidity pool. I think we are below it already. Yep. Oh, hello, lovey. They're having breakfast now. Waffles. Okay. I'm being called, beckoned to the waffle barn. My brother's made waffles. Okay, so now we've taken that low. Now you're looking for your setup, you guys. Not that you would take it. We're just looking, studying price action now. I've got my carrot here because I want to see this candle get taken on the upside and used as support to run higher back into that range. So any opportunity you start layering your fair value gaps and stuff now. So this one here, this one here, and this breaker here, that one that takes out that low, last up close candle before making the run. You could say this one here, ideally a nice little structure break would be this guy right here. So if you take out the carrot with a body and you come back into these two candles, this candle, whatever, and look for that to run higher into that range. That's ideally where I'd like to see uh, that go next. So I will be posting on Telegram. I'm just going to go have breakfast. My brother's made some waffles, so I'm going to go have some breakfast, and I will post on Telegram little screen captures on stuff here after the fact. Uh, until then, keep your powder dry, folks. It's election, crazy times are here, so just study. These are great opportunities to study price action, and you can see how it's high resistance. You can get yourself beat up in here if you're not careful. Yes, it's still running for the levels we're looking for, but look how much time it's taken to get there. So until then, tomorrow, thank you very much again for tuning in. Love you guys. I really appreciate you spending your time with me, and I will see you guys tomorrow at bright and early. I'll probably be here again at about 8 o'clock tomorrow, and we'll see for non-farm payroll. We'll see if we can get through that. 15 minutes after that, then I'd be looking for potential for uh, a little bit of a liquidity action. I wouldn't take anything until I was absolutely sure we could get something, but we'll have a look at tomorrow after NFP and see we can find a good setup. Until then, I'll see you guys then. All the best. Take care. I'm going to go have some waffles.